that does the research and has any conviction. And it disproportionately benefits people that want to make the investment in the new world, and it transfers wealth away from people that are afraid of volatility. It's not really afraid of volatility. Amazon was volatile, right? A lot of people made a lot of money on Amazon. A lot of people made a lot of money, even venture capitalists, accept extreme amounts of volatility. I think here you have an example of a liquid publicly traded asset, which is volatile, but in fact, it's still misunderstood by 98% of the public investors. So it's an asymmetric opportunity to buy something which is no less risky than investing in a big tech company, but much less understood. And I think probably the Sharpe ratios would actually bear that out. Correct. If we looked at volatility adjusted yield.
John, what questions you got?
Yeah, nice to see you again, Michael. So you have mentioned, and I tend to agree, that Bitcoin is digital gold and it's a store of value. I'm curious what your thinking is behind people, companies, and other countries using it as a medium of exchange. We've seen El Salvador adopt it. What are your thoughts around that?
I really think that for the next decade, the screaming home run architecture is digital currency as the US dollar on top of digital asset as BTC. And I think that every country really wants to move dollars around as the medium of exchange, because 100 million companies have their accounting systems wired for dollars. And I think they want to use the store of value. And I think if you had $100 and $99 are invested in Bitcoin and $1 is invested in the USD, you have 99% of the benefit. In fact, it's not even that. It's like, you don't have to give up anything. If you have $1 million, you put $1 million into Bitcoin and you borrow $100,000 in USD, a stable coin, and then you pay your bill in the USD while the Bitcoin appreciates. So the net balance sheet ratio is 100% Bitcoin, but it doesn't make the currency go away, right? Like MicroStrategy's got more than 100% of its balance sheet in Bitcoin, but we still use the currency. So what I think will happen, if you really want Bitcoin adoption to take off, you don't want to squeeze out the stable coins. I think that the USD stablecoin is actually going to drive the explosion in Bitcoin. The use case of stablecoins up until now has been crypto exchanges settling offshore, right? They're settling crypto exchanges. We didn't use stablecoins at MicroStrategy for anything. We don't use stablecoins to buy Bitcoin, right? So what you want is you want 8 billion people to use a stablecoin to buy coffee. And you also want Amazon and General Electric and Apple to remit cross-border treasuries in stablecoin. And why would you do that? Because you can move money at the speed of light on Saturday afternoon for free. And right now, MicroStrategy can't move money cross borders at the speed of light for free. Would we move USD by a stablecoin? Yeah. Would we move Bitcoin? Well, we might flash it into Bitcoin for a second, move it in another second, flash it back into USD, right? A la,
Strike.
Strike and Jack Mallers. We might do that. But I actually think that what the world wants, not just the world, every consumer in South America, Africa would love to have dollars in their wallet. They would also love, they know that now. Everybody knows that now. That's 100%, right? Everybody knows they want dollars in their wallet now. So the US dollar could spread to 6 billion people. It would spread to 8 billion people if the Chinese didn't block it, right? It'll spread to all 8 billion people. Now, they don't all know they want to hold their life savings in Bitcoin, but that's growing at a massive rate. That's spreading like a virus. Every government knows they want to control their currency. The strong governments will. The US will. The Chinese will. The EU will. The weak governments won't, right? Afghanistan, and Venezuela and places with hyperinflation, Zimbabwe, they will lose their currency privileges because they're weak. And who will they lose them to? to the dollar, right? So what I think is happening is you're just going to see an explosion in the dollar, an explosion in Bitcoin, an explosion in demand for money moving over lightning rails. If you could move stablecoin over lightning rails, that would accelerate the growth of lightning, right? Yeah, the killer application I want on my phone is a lightning wallet with USD stablecoin and then Bitcoin, and to be able to move either of them at the speed of light in a programmatic fashion. And I think they both win. Who loses? And this is the key. Like there's too much. The dollar must lose so Bitcoin can win. No, who loses is weak assets and weak currencies. Can you think of a weaker asset than Bitcoin? Every other investment asset, right? Especially gold, silver, commodities, land, weak value stocks, and big tech stocks. They're all weaker assets. So you see money flow there's 500 trillion of them, by the way, right? We have 500 trillion in weak assets. If you got the 10 trillion from gold, we'd be up by a factor of 10. So I think that weak assets flow to the strong asset, and then weak currencies. How many currencies in the world are weaker than the dollar? Name one currency, fiat currency in the world, stronger than the dollar. None. They're all weaker. CNY is weaker. Every African currency, every Asian currency, everything. So 180 nominal currencies, a lot of them are pegged to the dollar, 130 floating currencies. They all can be replaced with the dollar. So who wins? Western banks, Western technology companies, Western hardware devices, the Western world, the United States, Western Europe. Who wins? Everybody that embraces Bitcoin, right? Who loses? The nation of gold, right? I mean, you want to declare war on something? Declare a war on gold. They don't have an army. They don't have an air force. There's no politicians running for office of president of gold. There's no city, state, country. No one is crying thinking that their way of life will come to an end if gold got demonetized. So if I had one request from the Bitcoin community, my request would be focus your guns on gold. Ultimately, gold is being demonetized. This is not speculation on the part of Michael Saylor. You have all the stats. It's been demonetized for the past decade, right? It doesn't have a country. It doesn't have an army. It doesn't collect taxes. There's not a single person on earth that is going to lie down in front of a tank to defend the nation of gold. And yet gold is the enemy, because gold is a dumb rock sitting. You can't mortgage your gold. You can't lean up your gold. It's hard to rent your gold or license it or develop it further. Gold is not big tech. You can't put gold on an iPhone. So ultimately, what you have is there are two things that should succeed and grow. The US dollar, if you live in the United States and you believe in Western values and freedom and justice, right, and Western law and the progressive movement, you want the US dollar to grow. And instead of saying, well, the dollar is like a problem to save in, forget about that. Just point out that if you live in Africa and Asia, you would give your left arm to trade in dollars, right? So the dollar should expand on lightning rails, and Bitcoin should expand, and they go together, and we all win. We all win, right? The world's a better place. Every company, everybody wins. If you're going to compete, by the way, if you're going to compete with Square Cash App, then you might lose. If you're going to compete with Twitter, you might lose. If you're going to compete with the United States of America, you might lose. My advice is, you don't got to destroy the banks. You don't have to topple a government. You don't have to crush a currency. You don't have to stop a regulator. You don't have to, eliminate PayPal, right? You don't have to compete with all of them. You can buy Bitcoin. You want to compete with something, declare war on a dead rock, right? Declare a war on the rock, right?
The rock has been losing for a while now.
And after you finish declaring war on the rock, declare war on dead property, right? Dead money, right? What are low velocity, not, I don't want to hold 500 acres in the middle of nowhere as a store of value. I don't want to hold 5 tons of rock as a store of value. I don't want to monetize these things. So if you start thinking that way and you think, I just want to take my monetary energy, put it into digital energy, and then I want to partner and ally with everything I find admirable, every great company, every great politician, every great country, right? Every great technology. Just be positive, be constructive, and we all go and we win together. The world will rebuild itself, right? It's going to rebuild itself. I would prefer that it rebuild itself in a peaceful, constructive, cheerful fashion, as opposed to, someone's got to lose so I could win. I think everybody can win, right? If we invent electricity and we invent math and we invent fire, isn't it highly likely the entire human race is better off because of math, fire, and electricity, right? I think, right? We can all win together, and so that's the way I see that.
Before we finish up, we've been going for 2 hours, but I know you and I could talk about this all day. If I just give you the floor to finish, when somebody says to you, why Bitcoin? What's your 2, 3, 4 sentence answer as to why has Michael Saylor, who had every option in the world to buy an asset and put it on your balance sheet or personally invest in, why Bitcoin?
Because I'd start by saying the human condition is elevated via the channeling of energy, and every great advance was a new form of energy, be it metallic energy in the form of steel or electrical energy or chemical energy. And Bitcoin is the next evolution of that, right? So the first reason is it's compelling and critical to the advance of the human race. The second observation is every successful investment idea in the 21st century was a digital transformation of music, digital transformation of entertainment, digital transformation of books, digital communications. Bitcoin's the digital transformation of everything else. Everything that didn't get transformed in the first chapter of the mobile wave comes next. So now we have digital transformation of gold, digital transformation of property, and digital transformation of energy. And for the first time in the history of the human race, you can literally take energy, transform it into something in cyberspace, store it forever, move it at the speed of light, program it, and eliminate the friction that is applied to that energy when it takes another form. Economically, energy is capital, right? We use the phrase capital. If you have digital capital, it's the digital transformation of capital, and capital is half of everything. If you sum up every piece of property, every corporation, the value of everything, it's all capital. You capitalized it. So if I capitalized everything and I stored it in 20th century instruments, I would store them in equity securities and bonds and titles to property. In the 21st century, I have the chance to capitalize the entire world economy and put it in a digital token we call Bitcoin. So why buy it? Because it's half of everything. It's literally half of everything, and it is the platform. It's the foundation upon which we build the 21st century economy. You could say 21st century cyber economy, but if you want to fix everything in the world, if I could eliminate the friction, move everything at the speed of light, make it immortal, oscillate it at 60 megahertz or faster, execute 1 million transactions a second and make it infinitely intelligent, wouldn't you think that that would be a good idea? Right? It's the future of capitalism.
there's not very many people who believe in this more than I do, but you may be one of them because I think you and I see eye to eye on all of this. So I appreciate you taking the time to come in here. I appreciate you two sitting around and watching this entire thing, coming and asking some questions. They'll be taking virtual laps for weeks now because you even hinted at the fact that you may be open to joining their union. I appreciate everyone watching at home. Please make sure you like the video, subscribe to the channel. Thank you to SoFi for sponsoring the Best Business Show. And we have lots and lots to go over after this conversation, but we'll be back tomorrow. And I think that's it. Go follow Michael on Twitter. I don't know if we've got anything else. I don't know if you
Thanks
need
for
any
having
more.
me.
I don't know if you need any more Twitter followers, but
I got one more question.
oh,
What?
Jesus.
Go ahead.
We talk about
Don't ask me what the price is going to be.
no, I won't ask you. No.
Tired of that question.
No, we talk about Bitcoin being good for business all
Yeah.
the time, and I think part of that is obviously the price has appreciated. So anyone who has been involved has benefited from that. But part of it is also just the community aspect of it, right? And how powerful that is. Is there a specific point in time where you were like, "Holy crap! Like this is wild. These people are really strong. They're really passionate."
I think that every single month that's gone by, I've just been more impressed with the community ethos. If you look at our press release, when we first bought Bitcoin and we said why we bought it, one of the lines we put in the press release is we're persuaded by the community ethos, by the community itself, that that this is digital gold and it's harder and it's smarter and it's stronger and it's faster than gold. And I think that came out of all my research before we actually made that announcement. And the way you figure out the community's passionate is you do your research and you study all the influencers, you look at all the podcasts and you read all the books. And you couldn't come to any conclusion other than the asset is differentiated based on the community ethos. I even tweeted this. I made this point, and I guess I'll elaborate right now. I said, the character of the asset determines the character of the owners determines the destiny of the asset, right? The character of the people that own something. If you own like Joe Random Yo-Yo coin and you're owning it to flip it on Saturday night, depending upon which way a football game goes, okay, that's the destiny of the asset, right? It's going to be short term because the people are short term. Whenever you buy anything, you got to ask yourself the question: what's the character and what's the intent and what's the strategy or the belief system of the people that are buying the thing that I'm buying? If I buy real estate in New York, right, you'll eventually sell it to someone else who swears that New York is the apex city. People that love New York, their opinion is there is no other city on earth where you could go. Everything is a step down. They have a view of New York as Mount Everest, and they're living at the top of it. And everything, if you were to say, have you ever considered moving to another city? They recoil in horror. Kind of like New York is like the Rome of 100 AD, and there's Rome, and then there's barbarians. Okay, so that's the character of the asset owner. What's the character of people that own Bitcoin? If everybody bought it because they intend to hold it forever, isn't that the kind of asset you want? Or if I told you people bought it because they liked the monogram, they own that dog. Well, how many dog coins are there? 48 or something? Well, if you bought the 47th dog coin, then the 49th dog coin is eventually going to demonetize you. So I think that's been very clear from the beginning. Bitcoin had the immaculate conception, right? I mean, you can't recreate this again. How do you have an open sourced, asset that was never pre-mined, that was never ICO'd, that no one thought would be that until it became that, right? So I think that my conviction grows with time, but it's pretty evident in August.
All right. So what's your no? I'm just kidding.
Do you have a price prediction?
It's going up forever.
All right, listen, I appreciate everyone coming. I thank you very much, Michael.
Yeah.
You've got a whole bunch of stuff you guys are spending your time on, so I appreciate you coming here, hanging out with us. And anyone who's got any questions, go tweet at Michael. He probably will not respond, but he'll at least read it. So see you guys tomorrow.
Have a good one. Thank you.
Good morning, everyone. Welcome back to the Best Business Show. I'm super excited. Today we have a very special episode. Myself and Michael Saylor sitting down for a 2-hour in-person conversation. Michael and I recorded a podcast episode about a year ago, right after he announced that he was going to put a very material portion of his company's balance sheet into Bitcoin. And so maybe, Michael, we can start with kind of a 1-year update from when you actually decided to make that decision and how things have been going so far with MicroStrategy.
Sure. Well, if you roll the clock back to July, we had $500 million of capital in our treasury. We were holding short-dated treasury securities and generating effectively like 20 basis points of yield on it. We'd seen a K-shaped recovery. Wall Street came back with a vengeance. Main Street was flat on its back. And it was clear there's monetary inflation. So we decided that we were going to lose a large portion of the $500 million in purchasing power if we didn't do something. My forecast then was probably like 25% inflation. And you could have got there just by looking at the S&P index. So I thought, $500 million minus 25%, like losing $125 million in 12 months is kind of like losing money at 2 to 3x the rate that the 2,000 people in the company were making money. So we either needed to give the money back to the shareholders or we needed to invest it in something. So the thought was, well, if we're a company, a Main Street company struggling against all the lockdowns with all the uncertainty, and we are doing it minus $500 million, it feels like a university giving up its endowment as it goes into a crisis, right? So decapitalizing the company, it was a way to give the $500 million to shareholders. They would have put it in the S&P 500 and they would have got 34% on it. Mm-hmm. If we had done that. But we would have, in essence, left ourselves defenseless without any capital. So that was one strategy. The second was invest it all. I would have bought $500 million worth of Bitcoin if I was a private company. I just would have walked out, bought all $500 million. I would have done it at whatever, $10,000 a coin. But as a public company, you got to think about your outside shareholders. And you can't, it's not like there's 10. Mm-hmm. You can't just go to the 10 of them, ask them what they want to do and get their buy-in. When you're public, you've got a shifting set of outside shareholders that are changing every minute of the day when the stock market is open. So the way that you actually handle this is a bit more sophisticated. What we did is we transparently we telegraphed that we were looking at this. Our first press release was an announcement that we were going to buy back $250 million worth of our stock over the course of 12 months. And we were going to invest $250 million of our capital in hard assets. And we said, we're looking at everything under the sun, and Bitcoin was one of the things. So my first love of the Bitcoin community was, the way that I knew I liked all the Bitcoiners was one day later, some cyber hornet, some Bitcoiner goes, MicroStrategy is considering buying Bitcoin with $250 million. Now, as Bitcoin merged in there with gold, silver, commodities, equity, property, real estate, anything you could have imagined. But the Bitcoin community immediately picked up on that. I don't know how they do that, right? They must be scanning for this. Nobody else picked up on it. The stock was trading $120 a share. A week goes by. Literally, you announce you're going to spend $250 million and buy your stock back. You think it would move? Nope. Crickets. But the market had a week of notice. And then a week later, we stepped it up into the next gear, which is, okay, we're going to buy $250 million worth of Bitcoin. We made the decision. We're not splitting it across 6 assets, right? And it's a good thing we did, right? Because Bitcoin's up 332% in 12 months. Gold is down 7%. If we'd split it 50-50, 125 million of gold, 125 million of Bitcoin, right? It would have cost us billions. If we'd gone all gold, it would have cost us many, many, many billions. We'll come back to that in a second. So we had to do something, but the question is what? So we just picked Bitcoin. We made the decision, but we thought, this is going to be jarring for some people. Stock is around 122 at the time, right? To put this in perspective, the company's $500 million revenue generator, generating cash flow, and we have more than $500 million in cash and about 10 million shares. So the company's trading at 1 times revenue plus cash. Mm-hmm. We give back all the cash, the company trades at 1 times revenue, the stock goes to $60 a share, right? So we're like 122, no one's really paying attention, but we said, well, maybe people think this is offensive, they're not gonna like this, or it's too risky. How do you actually orange pill every one of your outside shareholders at the same time? Well, you can't. So the next best thing is we just offered to buy them out. So the idea is, if you don't like this, we're going to buy you out. We're going to post $250 million to buy back shares at a premium. So we offered to do the buyback at up to $140 a share, which is, buyout premium. If you don't like it, then you sell your shares back to us at a profit. We wait 20 days. So the market trades for 20 days, and in the first week, the market's trading on 135. Like people, so they're not even quite sure about the buyout. Then after a while, they start thinking, they're like, well, if I can put it back to the company at 140, then presumably maybe it's worth more. So the stock trades up a bit past the 140. And at the end of the tender period, we have about $60 million worth of shares tendered. Everyone that didn't like the strategy had 20 days to sell into the open market. And if you sold in the open market above 140, then why wouldn't you? And if you're still holding the shares at the end of the tender period and you don't like the strategy, you sell into the tender. So the result of the Dutch auction is we had $175 million of extra capital. We thought about it. We put out another press release. Okay, this is our primary treasury reserve asset. So the first notch was, this is a treasury reserve asset. The second step is, this is the primary treasury reserve asset. Then we bought 175 million more Bitcoin. So at that point, we're up to 425 million. The first tranche is in the 11,500 range. That was a little bit difficult. It was more difficult to do the second tranche because Bitcoin traded down. We had a loss. It traded down to into the tens, and even, you remember that. So the second tranche we bought at 10,000 something because we're committed, right? And if you go pull the Twitter stream, there's all sorts of interesting commentary on our strategy.
So you basically had done, let's call it up to that point, $425 million of a $500 million balance sheet. and you had rotated your shareholder base to people who were aligned with the strategy, and you had also planted the flag in the ground as the first publicly traded business in the United States to identify a treasury strategy that would leverage Bitcoin as the primary currency or the primary asset that you would use in your treasury. When you do all that, I know that there's been a whole bunch of conversations in the behind the curtain. I don't need names, but what are other fellow publicly traded companies, other finance executives, people on Wall Street at that point? Are they saying you're crazy? Are they, oh, wait, this is really interesting, tell me more about it, trying to learn? Like, what was the reaction after the first $425 million?
I think it was largely ignored by every other publicly traded company. I don't think there's a lot of awareness or to it. When we did our due diligence checks, we found Overstock 2 or 3 years ago had a few $1 million of Bitcoin on his balance sheet. And that's it, right? We couldn't find anybody else. And so this is off the beaten path, but it seemed like so rational to me. Like, it seems so obvious. Bitcoin is digital gold. It's basically engineered to be digital gold. What do you need in a inflationary environment? You need something that's like gold, but better than gold. You have to make a choice. It was obvious that the institutions were coming, right? I mean, you had companies like Fidelity getting into this space just 6 months earlier or whatever. But the fact that we're institutional custodians was a big checkbox. Grayscale was doing good business at that time. So it struck me as being a rational thing to do, but no other public companies had done it. And it wasn't totally clear to me why, although at this point now it becomes clear, right, in hindsight. So we went through that. We did the 425 million. The stock traded up. Bitcoin started trading up. At that point, I started speaking in public, and you were the first person I spoke to.
I remember.
Right? and I learned most of what I knew about Bitcoin by scouring the internet and looking at your podcast and reading all of the stuff that was posted, right? And I tripped through all these different things. And one thing I knew from your podcast was you always ask a question, right? At the end, right? You're like, you can ask me a question, remember?
Correct.
Now you get to ask me the one question. So what I remembered about Pomp was he wants to know a book and he wants a question, or he gives me a question. So I'm like, gosh, what question am I going to ask Pomp? And, how do you learn Bitcoin? You study Twitter and you study YouTube and you surf the web. So here's what I know. I know I get to ask you a question, and I know Jack Dorsey has Bitcoin in his bio. So the question is, how do we get Jack Dorsey to buy Bitcoin next?
Correct.
Right?
Correct.
And, at that point, we're all alone as a publicly traded company, and people aren't quite sure if we're crazy, but what happens next is some bullish things, right? I mean, I thought that when Square bought Bitcoin, that was a seminal event, right? Because one data point is a question mark, but when you had the second data point, you can draw a line. And so that was a big day. When PayPal announced support for Bitcoin and they started moving it, that was a big day. That was a data point, right? Those were the data points that moved us from 10,000 to 12,000 a coin. And at some point, some Citron research studied, discovered my stock, and Andrew left, I guess, said something positive. And the stock started trading up, and then it traded into the high 100s, and then it traded into the 200s, and Bitcoin started trading up. And when we got into the teens, people thought, oh, well, there's something interesting here. So the next step in our journey was, like, in addition to me starting to communicate why we had done what we'd done, the next step in the journey was to go out and buy more Bitcoin. So we started buying more Bitcoin as part of the Treasury Reserve strategy, and that got people's attention. Then when the stock got to the 300 range, that was the highest it's been in a decade, 300. So we started thinking, well, maybe we can raise more money. And so we went back to the convert market, and we had we were trying to raise $400 million in a convertible debt offering, but it was extremely popular and we were oversubscribed. So we upsized the deal to $650 million. So that was a screaming home run. We had proposed a 32 to 37% premium. We priced it at a 37.5% premium, the high end of the spread. We'd proposed like 1.25% to 0.75% interest. We priced at the low end of the interest rate. So we raised $650 million at 75 basis points with a strike price of $398. The stock had not traded at $398 in a decade. So it seemed like reasonable. If you could sell $650 million of stock at $398 a share, seemed like a reasonable thing to do at the time. So then we took that and we bought Bitcoin with that. So that was, we started out with we're going to raise the money for general corporate purposes. And along the way, the discussion was, what are you going to do with it? And I said, well, I want to be able to buy Bitcoin with it. And they said, well, we should put that, into the disclosure. I said, yeah, we should disclose that. And then they said, well, are you sure you're going to buy it? And I said, yeah. So eventually it flipped and it became, we're doing it to buy the Bitcoin. So that became, in the history of first, right? We're the first public company to buy Bitcoin on the balance sheet. We're the first public company to declare it a treasury reserve asset. We became the first public company to do a Dutch auction, which is in essence like an equity issuance to buy Bitcoin, right? It's like I'm either buying my equity back or I'm or issuing the equity. So the first Dutch auction, where the proceeds eventually became Bitcoin. Then the first convertible bond to buy Bitcoin. And I think that all of those things rotated the shareholder base, right? I think the most important thing was to be long Bitcoin, right? So in essence, the first publicly traded company where the shareholder base is long Bitcoin. And it started out, my aspiration was, it'd be great if half of our enterprise value is based upon enterprise software and half is based upon the assets. Because before we did this, we got substantially no credit for the assets. Like people were basically taking the 500 million and they're like, okay, well, that's going to be worth zero, right? Or negative.
Because you were 1 times revenue plus just the cash on the balance sheet.
Yeah. Yeah. So if you've got a low growth cash cow, right, that's like being a dentist where you're going to make a lot of money every year for a decade and maybe you'll make 5% more each year for a decade. If you've got a low growth cash cow, but the money supply is debasing at 25% a year.
Kills you.
Right? It's like the road to serfdom is working exponentially harder for a currency getting exponentially weaker. What I saw was 2,000 people doing 100,000 things right every year to make $50 million and then watching the enterprise lose $100 million a year due to a political decision. So in essence, we're running as hard as we can. We're falling backwards. And the situation was literally hopeless, right? Like people wonder, where did the Bitcoinist hope come from?